This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro. So I am going to do a market update. I told you last week I wasn't sure if I'd be able to do it, but I am going to get it done. I'm in the hotel room. When I switch over, I'm just going to have the chart up. I do want to go over a couple things. I'm going to go through a specific trade setup, but actually I want to talk about something because I think we're at a pretty critical point in the overall market here. It's somewhat of a binary situation, and unfortunately I'm doing the video prior to the labor number coming out tomorrow. And I think when we get that number, that economic number coming in on Friday morning, that I believe it's going to be a pretty big market mover in one direction or another. I'm leaning towards the upside, but it really could play out either way at this point. Let me go into the reasons why. So let's go ahead and go to the charts. Okay, so first of all, one of the things I want to say is that we're in a situation where it's hard to tell there's no way of knowing what the labor number is going to be and when the jobs report comes out. Is it going to be bullish or bearish, and what effect is that going to have on the market? You don't want to really pre-guess that, oh, I think it's going to be one way or another and this is what it's going to do. What you want to do is frame out the market and figure out the key levels. And I'm going to try and help with that today. I do want to address something because I obviously have stated, below 4,000 is a no-buy zone, okay? And I think you could still abide by that as a longer term. So if you don't want to get messed up in the short-term environment and you're looking for a little bit more confirmation, I would still abide by that 4,000 mark. But I'm going to show you some of the things that have caused me to shift my thinking. I was sort of the opinion that below these two lines was maybe a death march, and now I'm having a different opinion right now, or I'm having a different feeling right now. If I get a few things have to fall into place, but if they do, I would not be surprised if we get a pretty good rally from this juncture. And let me go over a few things. Number one, we peaked out at the 18-month line. This yellow line is the 18-month overlaid on this daily chart. We failed there, and we started making lower lows and lower high, lower low, and then we've rallied up to the 18 again. If you notice, we're basically failing at that line. Well, we're not failing at it, but we're sitting at it and we can't get through it. Okay, and but we've gone all the way down from the 18-month line down to the quarterly 18. We're getting pretty close. We almost got there. I was really hoping we come into the week and have a down week, maybe some volume explosion, and then I would feel very bullish about what's going on right now. And the main reason for that is because the sentiment number dropped again. It went from -9 to -16% this week. I mean, I'm telling you guys, I've followed this indicator for 30 years. This was at -16. This was at like positive 16, 17, something like that. And now we're back to this level again, -16%. I mean, that's a big number. Just to give you an idea, when we were here, I think we got down to like maybe -10 or 11 or something like that. So this is, it's not a small thing, but it's not a timing tool. So I need evidence in price that the sentiment number is telling us something that's worthwhile. In other words, if I get a signal now to the upside, I want to take it seriously because there could be some pretty good movement taking place. Now, if you're an ETF guy or more of a, if you're looking at, like, let's say you have some long-term money, you've been trying to decide what to do. Maybe you sidestep the market a little bit in here. This might not be a terrible time to take a piece of that. I'm not saying to go nuts, but maybe put in, a third or a quarter or something like that. I mean, the areas near the quarterly 18 tend to be pretty good times. Now, if we're prepping for, whoops, let me delete this. If we are prepping for Armageddon in the form of the 2008 decline and everything, I guess that could be possible. I'm just telling you, the sentiment numbers have me questioning that. So what I would tell you to do is don't go crazy, but maybe do a little bit of buying. Again, if you're a longer term guy, typically when the sentiment numbers get this negative, it's not a bad time to do a little bit of buying. Now, we want to get through this 18. I mean, this is key. Getting through the 18 day at least gives us room up to the 18 week. And one of the things that I would say is that has me somewhat intrigued here is we have an undercut pattern developing on the daily chart. So we've undercut. If we form a higher bottom here, so even if the number tomorrow isn't so great, but it comes down and fills the gap and then turns up from here, it still could be setting up. I would tell you that if we come up through this 3,800 level, I think is pretty important. Okay, so let's go and look at the momentum indicators right now. And again, we're below a declining 18-week and we're below a declining 18-month. I'm not trying to say that that's still not important. And if you want to wait for more confirmation, then that's your answer, getting through that line at a minimum, the weekly line, preferably through the 4,000 level. But I want to bring something up. If you look at this monthly chart, we moved up and then we came down and we broke this line and now we've moved down. We've moved down about the same amount that we were above. So as above, so below, and I don't use bands, but if you put bands up there, I got to believe you hit the upper band up there and we're probably hitting the lower band right now. So I think there's a pretty good chance based on that we could be looking for signs of some kind of a retracement. Also realize that this MACD line has dropped down below this prior low. So we have the potential for reverse divergence. It doesn't mean anything without some kind of confirmation. But now look at what the weekly's doing. So we're making a lower low here, and we're making a higher low on this end. Now, what's hurting this whole pattern is the ADX is still above the 25 level. So we have to have some tempered enthusiasm for this. I'm telling you to be a little bit more of a trader. What I've been talking to my subscribers about is there's a lot of improvement in the individual stock patterns that I'm looking at. The type of patterns that I talk about in my videos on this channel, where I've got the ADX or the low ADX breakouts, or the strong ADXs that are pulling back, the ones that have good relative performance right now. All those stocks are trading pretty well, and that really hasn't been the case during the course of this year for the most part. So it has me intrigued from that standpoint. That's separate from my weekly review of the index. We're still contending with this declining 18-day, which happens to be the downtrend line on the daily chart. But let's just look at what's going on the daily MACD. I can see that this is normalized oversold. You see how we're coming down to the same level again? Oversold, 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 oversold. This is an area where we should be on the lookout for some kind of a move back to the upside. Is it going to be, is it something like it happened from June to August? I mean, I don't know. I'm not sure about that, but I have the antenna up because of the sentiment number. Okay. So let's just look at this hourly chart now. Here's the real kicker. We had this pattern where we basically took out these lows, and this was the bar. This big red negative bar was the closing bar for the week. That's how we closed the week, right? Look at the volume. We had red DI on top. We didn't have any confirmation of any kind of divergence yet. We had potential divergence because these hadn't gone to new lows yet, and the ADX line hadn't crossed above 25. But then come in Monday morning and we gap up. This bar right here was incredibly meaningful to me. Instantly, the moment it happened and closed, I said, this is really important, because now not only do we not have the confirmation on a MACD basis, now we have this ADX pattern where we made a big ADX reading, a big ADX reading on the trend down, and then we made another new low and we didn't even get above 25. I've said this over and over again on this channel. When I see that, I'm looking for some kind of a reversal. So we see that, and now let's just go to the 10-minute chart. We get a undercut and rally. And yes, I know what you're going to say. This is an undercut and rally. I mean, it's not perfect, but you have to understand you're catching so many people by surprise, and you have so many bearish people, and then you gap it up. You have to sort of assume you're catching some people, maybe a lot of people getting bearish. It's become really obvious when you look at the charts that anyone who has had training in technical analysis for like 5 minutes knows that it's a bearish trend across the board. You can look at a weekly, you can look at a daily chart. Everybody in the world is in agreement that the trend is down. When that happens, you have to be on the lookout for some kind of a retracement back up. So we don't have the indicators telling us anything, but I had to accept what was taking place. And on this green bar, as it was crossing back up through the 40, I decided to take this trade. I didn't do it in the spider. I did the U Pro, which is the triple the spider, because I felt like they really had caught these guys off guard. Even me, I wasn't expecting it. I was expecting follow through to the downside and then get a reversal and some kind of a climax. And instead, they gapped it up and turned it to the upside. I think you catch a lot of people off guard. I'm always trying to figure out where I am in this situation and what other people are thinking. And I really felt like you weren't going to get the perfect entry point. But we did get this big green bar to finish by the end of the 10 minutes. And so I felt pretty confident by the end. And this is one that because didn't have a huge amount of longs. I did have some longs that I have been hedging. I did the U Pro to kind of really participate, and it's been a very good mover. Obviously, has made pretty substantial gains. So anyway, I'm not trying to say, hey, I'm so smart, but I wanted to explain to you how this undercut pattern, and what I've said from the first day I started doing these videos, is that the trigger is different. It's not easy. It's not going to be the same every time. It's going to be a little bit different, and you have to have a little bit of a feel sometimes. When I look at it from a hourly standpoint, it was pretty important because we didn't get confirmation here before the turnaround. So anyway, that's the update for the week. It's a trading play. It's the reason why I'm watching this 3,800 area for the S&P. I do think that's a pretty critical level. If we can get back up through the 18-day, we could have a potential trading move that lasts a little bit longer than the average person is thinking. All right, and for all I know, we make a pretty important low. I don't know. I don't need to pre-guess that, because if we get up into resistance, then I know that we're going to start to see things going wrong. So anyway, that's the update. Go ahead and post any questions or comments. Thanks.